Good afternoon, everybody. This is Doc Severson, and I've got Dave Lukas here of 12 Minute Trading. Today is Tuesday, the 17th of January, the day after Martin Luther King Day, and the first live day of this trading week. So here we are on a Tuesday. It feels like Monday, but it feels like the same old thing that we've had. We got the market going basically nowhere, waiting on tomorrow's PPI and retail sales. Dave, what are you seeing in the markets these days?
Well, first off, days like today are my absolute favorite as an option seller because the market goes nowhere and it just burns time, especially my short-term trades, like what you do in the Target 100, trading 4 or 5 days out. Like today's are golden. Like this one day like this, you can get in the trade the same day and close it out. So it's nice to see that this is probably the first time I've seen a day like this and a really long time. So it's nice to see we've kind of maybe gotten back to this a little bit. But right now, we've got a couple really, really important things. This week, I think, is an inflection point. We are right up at that 4,000 level on the SPX, which is the last high for the daily chart. And so we've got a lower high that we've got to eclipse, but we just put in a higher low, right? And so that's one thing you want to see when market's going to turn. We've done this crazy thing. We keep going to a lower high and then to a lower low, lower high, lower low. Well, we just put in this higher low. So we need to eclipse that last high in the charts and get past that moat, as they call it, the mother of all trend lines that we've had at that 200-day level. And so we're this week, kind of that week for it to do that. The charts still have enough energy in them to do that. And then the focus turns to the weekly chart because the weekly chart needs to do the same to really change polarity, right? If you look at the time frames, the daily, the weekly, the monthly, I think Doc and I use the same example. We always look at it like the parents or the kids, the parents and the grandparents, right? And so the kids do what the parents tell them to do and the parents do what the grandparents tell them to do. And so right now, the kids just, acting up in that back seat, and that parent needs to grab them and bring them along and, tell them, hey, this is the way we're going to go. So if the weekly chart, which has pretty much a full charge on it, decides to continue higher and takes out 4,100 and puts in a new high, right, eclipsing that last lower high that we had off of this low that we've now put in, that's a higher low, I think we have got a good change in polarity. I'd be a lot safer to say that a bottom has been put in at that point, and we may be turning the corner. I don't know if we're going to go to new highs, but we certainly may be at that point where we're done, going to new lows. So
yeah, so here's kind of here's that price level.
Probably showing the charts.
Yeah, here's that price level that Dave's talking about at 4,100. This is the SPX cash index. It's going to be slightly different on the S&P 500 futures, but the other thing, too, technically, is this long-term trend line, which has been in place for more than a year now, and we're right there, just smack right up against that. So that's forming a confluence of resistance. So if we're able to see the price squeeze above and beyond, then it should be able to run up to 4,100, and then the issue will be less in doubt if it's able to, like he's talking about, break over the 4,100 level. Otherwise, and it's fair to point this out, if we do fail at this point, this entire move then becomes a monthly lower high, and that's going to be an extremely ominous signal because usually you get off a monthly lower high. If it sets up and it sells down, in this case below about 3,800, it could be a very nasty signal. So a lot of people have finally gotten away from this whole notion of the 2008 analog. I think they've realized that every market's somewhat the same. So we've got this huge tipping point, and I think within the next week or so, we're going to know whether or not we've got a shot at breaking out above 4,100, or this is just the next torturous bear market rally, which is getting faded to the downside.
Yeah, I'd agree with you. And the other side of this too is like, I don't know if it's going to really reveal itself this week. We may kind of plod along for another week or so before we really see any significant movement off this. And the reason I say that is because the daily chart's getting into an exhaustion range. Now, if there's a huge surprise in the PPI tomorrow, that possibly could make things go one way or the other. But what we're looking for is the weekly to really choose its direction from this point. And in the weekly chart, where the daily chart energy happens over 5, 7, maybe 10 trading days, the weekly happens over weeks, right? So it takes several weeks to get that thing going and to start to see where it's trending to and that sort of thing. So as you can see on Doc's chart, he's got that circled in the middle chart there. It's sitting there at about 56. I don't call a weekly swing until that thing is well below 50 and has established the direction it's going. As of right now, it looks like it released from 60 and is going upward, right? But I've seen this thing turn around, right? And right here, we could see it. We could hit this trend line, pull back down, and all of a sudden that weekly chart energy will go back up again, right? And it'll start to charge itself back up. So really want to see that thing get below 50, see us continue above that trend line with that. And then I think, we can confirm that this is going higher. And if that does happen, you're looking at probably SPX 4,300. If this thing wants to burn its energy out. So it literally pays to have patience right now.
Absolutely. Yeah, we've got, there's so many things in mind right now, because it's like Dave said, the daily chart's just about burned out from this. We've had over just a little over a 200-point swing to the upside in a very short period of time, just about a week. And so this has been a nice breakout from that consolidation pattern. It's broken out to the upside, but it's come right up against, full-time resistance at the upside. So are we going to get a catalyst through earnings? Right now, the Fed's on hold sort of until we get to the 1st of February. That's the next scheduled meeting. Although we can have a lot of Fed speak that happens that typically peaks out about 2 weeks before that meeting. So they're going to have to do it in a hurry here if they want to get in front of the market. So it could be earnings. Oh, that's a nice fill. That is a low probability trade filling. I like that. That's always a great sound. So so the Fed's going to have to hurry if it wants to push the market around, because they're going to get into a quiet period at the end of January where they can't speak to anything. And then right around the time that they do speak on the 1st of February, that's just right around where all the big tech earnings are that week. So you've got Apple, you've got Amazon, you've got Google that week as well too. So, Meta's kind of out of the picture. What's that?
Maybe Tesla, even with all the trouble it's had.
Tesla's coming up soon. Tesla's coming up
so
soon, I think.
So that's but it's all kicks off with Netflix this Thursday. So I do think you'll see the NASDAQ start to move after Netflix, kind of setting the tone for what earnings season is going to be like. And that's a really interesting thing. We're kind of shifting again to where the Fed dominated everything, just absolutely dominated everything. And we're starting to shift back probably to where earnings matter again even more, right? Because remember, the underpinning of the market is earnings, right? That's what the market's trading off of, the future. The market's a forward-looking instrument, and the underpinning of it is earnings. And so, up until this point, the Fed is dominated because of the uncertainty with how far they'd go, what they do. But the speakers even, last week and stuff have pretty much said 25 basis points. I think 2 of them actually came out and said 25 basis points is what we're going to do at this point. So I think that's kind of baked in. There's certainty around that. We're at the end of the Fed tightening cycle. The market knows that. So now it's kind of looking back towards earnings and what the future holds there based on the recession narrative that we're hearing, right? That's the whole thing now, is that this is maybe the most telegraphed and most predicted recession that we've ever had at this point, right? And so we'll see if it comes to fruition or not. But the funny thing is that the market, if you're going to see massive movement, you're going to see, especially to new lows, 3,000, as they have been saying to us, especially things like that. It's going to need to go. You're going to need a catalyst, because a recession is not going to do it now. Everybody's priced it in. Everybody knows it's coming. It's like the glaring thing that everybody sees in front of them, right? And if it doesn't, it'll just spur the markets higher. So
we already had one. We already had one a year ago. The first 2 quarters.
Last year.
The first 2 quarters were consecutive negative GDP. So what else, and we correspondingly sold off. And now it's kind of like, oh, your recession is so 2022. Everybody's just sort of over it. And so when everybody is leaning the same direction, we want to go the opposite direction. So we're looking for opportunities where we may, just for a little while, maybe we might start to nibble at some longs. So that could be that'll be a comfortable feeling again. I'd like to get back into a positive drift scenario once again. That is more of a comfort zone.
A quiet and trending market would be just a breath of fresh air over the last year. But I'll tell you what, for those of you that traded through this market last year, number one is one of the best educations you'll ever get. But, number two, if you were like with us and our services, what we did, just, kudos to you, because I think I started saying it in April, May, that really the key to a bear market is to steal your mind and really get control of your emotions, because it will wear on you and wear on you and wear on you till you give up. And that's usually when it turns, right? And so, maybe we're at that point where it just wasn't a capitulation, but just a slow grind lower, wearing people down to
just
where,
death by
they gave up.
cuts.
And now,
death by 1,000 cuts.
Maybe that's where we're at.
Yeah.
So,
and that's the thing. Like, one thing I've been saying is like, a bear market never finishes until you get a massive, terrible capitulation. And it's like the lesson that I learned from 2009, because if you go back to 2009, we were just dropping off a cliff, and I said, nice bounce into the summer of 2009, but we're always going to double bottom. We're always going to retest that bottom. It didn't. It just took off.
Right.
So we could have the same thing happening this year. We could see a market that just says, we're bored by your bear market. We're just going to rally from here. So we'll see what happens.
We saw a market like this in the late 60s and 70s, where we had a big down bear market year like that. And, everybody expected it. I think it was the year of Woodstock. I think it was 69, right? So I think that was the year of it, if you go back and look at the charts on that. And the next year into 70, everybody thought it was going to continue, and everything else looked actually a little bit similar to this, and it just took off. I think it was like up 20%, 22% for the year. So it just, price is king. That's what matters. At this point, nobody knows anything. So, everybody's it's so funny to go on like a Twitter or listen to the pundits on TV, because every other one says the opposite of each other at this point. Yeah. Nobody really knows. And so you just got to trade your plan.
Yeah. I guess the thing I'd like to leave you guys with today is that, we're not sitting here trying to predict the future, unlike what many, many people think that, like you'll see a typical comment on Twitter, like, hey, what do you think is going to happen next week? We don't know. We have no clue. We have no clue what's going to happen next week. Now we could say something like, well, if the price gets above 4,100, we might start to see a short squeeze, which is fair, but we're not in the business of like looking into our crystal orb here and predicting the future. Only price pays. Let the market show to you which way it wants to go, and then simply take it for a ride. That's really it. It's not about predicting the future. It's not about, using some kind of magic study or magic indicator. It's having the patience to allow the price to show you what direction it wants to go to. And if it doesn't want to show you that, then we'll trade it range bound, in and out for as long as we can. But if it wants to get up and boogie, then we'll simply let it go, have its move, and we'll trade along with it.
Yeah. But I think it brings up a really important distinction and a point. That's why we sell options. We don't buy options. We don't buy stock. We don't do that because you have to be right? Most people buy, whether it's an option or a stock, and they hope it goes in the direction that will make them profitable. That's a 33% chance of making money, because it can go up, it can go down, it can stay the same. And you got to be really, really right to do that, right? And so the thing that we realized years ago is like, we don't want to have to play that game. We don't want to have to sit there and try to be right or try to call a direction. Let's play in the margins where the others aren't. And so I can go out and, sell it, like for example, sell an iron condor on the SPX, with 150 to 200 points on either side, and just say, okay, as long as the price stays within under 150 to 200 point move for the week, I win, I make money, right? And so that's a lot easier to win and manage than trying to predict which way something's going to go. And so that's why we do those type of strategies here at 12-minute trading. It's just the other side. It's almost like being the house where the gamblers are the ones buying, but we put the odds in our favor just by selling from the get-go, and have ourselves on the other side of that 33% just by the type of trades that we choose to do. And I think that's a very important thing to help create an edge in the markets when you realize things like that. So for what it's worth, that's kind of a different philosophy for you to think about in your trading.
Well put. Well put. I'm going to just bring it up here because we're just about to get to the closing bell. So it looks like today is just about as flat as it's going to be. We're slightly up on the NASDAQ, which makes sense because the NASDAQ has been so beat up for the past year. It is way down. It was well down. I think it was like 35, 37%. So having a little bit of a bid under the NASDAQ is good. We're seeing a relative weakness in the Dow, and a lot of that was due to Goldman, I think.
Goldman. Right.
And so overall, the S&P is always the best barometer of where the market is. It's going to be in the middle kind of what's going on, although heavily weighted towards tech still heavily weighted towards tech. And so that's why the S&P's had a very flat day. So you can see just in today's price action, you can see the opening range of price has just been basically staying within the opening range, which is this red area here. So there you go. All right, that's today's live market update. We're going to have the closing bell ringing in about 12 seconds here. But thanks, everybody, for checking in live. And for those of you also checking in via the replay of this, let us know if there's any questions you want us to cover for the next time. There we go.
There it is. Watch that weekly chart over the next week. Start to watch and see which way it decides to break. I think that's a telltale sign for, at least the next few weeks to a month or so.
All right. Well, everybody have a great week. We'll see you again next week. Take care.